I just got done with my trading, and I think slowly and steadily I'm coming out of my trading rut. If you guys have been following me on Instagram, I briefly mentioned this that I haven't been trading really well. Yes, I have been green this whole week, Monday to Friday, but from Monday to Wednesday, my executions were not really good and I was not happy about that. I saw my game plan working out in my favor from Monday to Wednesday, but my executions were all over the place. I was trading emotionally, I was entering where I should not enter, and I was exiting my trades prematurely. I even posted about this on my Instagram. Some days I was making $700, the next day I made like $70, but on Thursday, that was yesterday, I made $3,000 on one good trade on SPY right at the open within the first 30 minutes of the open. Today I made approximately $5,000 on Tesla catching one good trade. So that's how I want to trade. My game plan was really good on Thursday and Friday, and I was able to execute properly on those game plans, because that's what matters. You can have the best game plan in the world, but if you're not able to execute on that game plan, then you won't be a consistent trader. So now let's take a look at my trade on Tesla that I took on Friday to end the week with. I made $5,000 on this trade within the first 10 minutes of market open. On Tesla, I had a simple game plan because the prior day on Thursday, on Wednesday after market close, we reported earnings. On Thursday, we gapped up, and that was a gap up of approximately 10%. And I did not take any trades on Thursday right here because the gap up was too big for me. I was not liking like we are gapping up 10% for the day, and we were holding in between this range from 155 to 161, and that is what I mentioned in our Discord group as well to our members, because this 166 was the prior resistance, 161 approximately was the prior resistance. We can see that the high of the day on 14th of December was 161.62, then 15th of December was 160.93, 16th of December was 160.99. So that automatically makes this 161 a very nice resistance to keep an eye out. And towards the downside, we had the low of the day on 14th of December that was approximately 155. Similarly, the high of the day on 19th of December was approximately 155. And on this day, after the earnings, we were gapping up and holding in between this range. And that's why I was not a big fan of trading Tesla after the earnings. And on Thursday, I got a really good push towards the downside on SPY. But on Friday, the next day, we were gapping up. So we were above this zone from 161 to 155, right? And if you look right here from 160 to around 166, we only had one day right here. So that means we also have a volume gap. This is a no man land zone. So we haven't seen a lot of price action in between this zone. So that automatically means that we will have a volume gap right here between 161 to 166. Even if you go back and look at the price action from 2020 right here, this is the last time we were in between this zone. We can see that we never stayed in between this zone. Like we went towards the upside straight up, not a lot of rejection. The price was not consolidating in between this zone, right? So that means if we get a good push above 161, there's a high chance we see a push towards 166, and then the next profit target will be 170. That is a good psychological level. Even if you look at the volume profile, you guys can see that the volume has been going down. The volume is very low from 160 to 170. So there's a high chance that if we see a good breakout, if we see a hold of a level, then we might have a nice push towards the upside. And that's what we saw. At the moment, we are holding around 171. I took majority of my position out around 164, 165, but this was a really good push towards the upside based on the volume analysis. Now here's a 5-minute chart of Tesla. We can see that right off the open, we dipped to this $161 level. I entered my position right at the bottom. On the 1-minute chart, we sold off. The first minute candle at the market open was red. I entered my calls position right here. So I practically caught the low of the day, and then I caught this push towards the upside. The premiums moved insane. I was trading the same day expiry contracts. My fill on these contracts was 0.95, and at the top, these contracts went to like 1.9 and 1.8. So that was 100% return on your investment if you just hold this trade for 4 to 5 minutes. If I go back to the 5-minute chart, you guys can see right here, these levels worked out perfectly. As I mentioned that this 166 is the daily resistance that we made a few weeks ago. We can clearly see that we held this $161 as support right here. We broke towards the upside. Then we held this 166 as a nice resistance because that was resistance on the 1-day chart as well. Once we broke above this resistance, that resistance now turned into support. We pulled back to the support, and then we had an insane rally towards the upside. And that is most likely because of the low volume from 160 to around 170. 175 zone. So guys, here's a screenshot of my entries and exits on the 1 minute chart. I entered 100 contracts, 165 calls, same day expiry at the low of the day right here when we held the previous day high around 161.4. My fill price was 0.95. My first profit target was a break of 163. I started covering my position. These premiums went insane from 0.95 to my first fill at 1.30. Yes, the premiums are pretty cheap, but if you look at the percentage, that is a reward of approximately 40% on my investment, which is insane. And at the highest, the premiums went to 1.89, which is insane. Like, this was amazing trade with amazing risk to reward. In total, I made approximately $4,800 within the first 10 minutes of the open. You guys can see my entries and exits right here. I entered 165 calls at 9:31 a.m. 32 seconds. My last exit was at 9:39 a.m. 50 seconds, making $5,000 to end the week with, which is an amazing trade. And guys, I also want to show you this thing because it was not only me. I mentioned this exact game plan, the hold of 161 for a push towards 165 in our pre-market webinar. A lot of traders got that same. They caught it again, caught her too as well. Then missed this one, but let's go still in. This trader was still holding. A lot of traders caught Tesla, and I also had Amazon in my game plan. So I had these two stocks, Amazon for the break of 100 and Tesla for the hold of 161 for a push towards 165. Both of these stocks were amazing. A few traders caught Amazon, others caught Tesla, and they printed money to end the week. If you guys want to join our Discord group, a community of serious and supported traders, now is the perfect time. It's start of a new year, so the link will be in the description box below. So that is it, guys. I think what is helping me to come out of this rut is to do a lot of self-reflection and technical analysis. To be honest, I'm not working a lot on my mindset or psychology because I just feel like my win rate was too less. I was only winning 40 or 50% of my trades, which is still good enough. But for me, I at least want my win rate to be like 60, 70, 80%. Sometimes it's even 90%, which is what I like. Because trust me on this, it's going to be very difficult for you guys to have like a motivated and positive mindset when your win rate is only 40%, right? So the first thing is you need to have a valid strategy with good enough win rate, and then you have to work on your emotions and psychology. Because in trading, I feel like a lot of traders, they focus too much on the mindset and everything, but they don't even have a valid strategy. Yes, after a lot of experience, trading is, I would say, 80% psychology and emotions and 20% technical analysis, but the market keeps on changing, right? So that 20% needs to be focused on. Because the thing about the recent market we are seeing in 2023 and even in 2022 is that the market keeps on changing every few weeks. So you have to keep working on your strategy, keep tweaking your entries and exits slightly to keep making money in the stock market. So you can't neglect that 20% of the technical analysis because you have to keep learning and keep growing as a trader. If you like this video, give this video a thumbs up and post a comment down below because it helps out the channel a lot. And if you guys are new, subscribe to my channel for a lot more content on day trading. If you guys don't follow me on Instagram, the link will be in the description box below. I post almost every single day on Instagram, so go give me a follow there. Thank you for watching, and I will see you guys in the next video.